So if we do have a final extension here, well, I call it a final extension. I shouldn't do that because it may not be. It may be. Maybe we have more demand than we thought possible, and we just keep going up. But according to the textbook, after base 4, you run to your sort of sell point.
Hey guys, welcome back to the show. I'm here with my favorite YouTuber, Kevin. How are you doing today?
What's up, Mauricio? How are you? It's good to be back. This is our second interview, I believe.
Yeah, exactly. And we've done so well on the first video, and I had so much fun, to be honest, and we decided to do another one. So thank you again for your time.
Yeah, it was a fun interview. We had to do it again. And the last time we had an interview, I believe Bitcoin was at, 41,000 or 42,000, something along those lines. So since that was January, since our last interview, we've come a long way. The price has gone up, what is it, 70%? Something like that. So, or 80% since the last video. So that's awesome.
Yeah, exactly. We were discussing it and trying to count and figure it out how long it's gone. And it's like, damn, it was $40,000.
I couldn't believe it. Yeah, I couldn't believe it. So there's a lot to update on in terms of that.
ETF, to begin with, when we did the first video together, basically the ETF were just about to be approved. It was January 11 when they said, okay. And I think we've seen the first dump.
You had a sell the news event. So I guess you could flip to the share screen. The last interview was right here. So if I go to the daily chart, you can see where we are now in this consolidation. And in the last interview, we were sitting down here. Right after the ETF approval, the price came down and people were, of course, worried, thinking that this was the end, that the ETF was the top, the cycle was going to end, it was over. But to everybody, all the skeptics were, I guess, thrown into the dust because the ETF provided tons of demand. It opened up the floodgates for institutions to get involved. And actually, I was talking with Crypto Zombie just yesterday. We were talking about how the institutional involvement in Bitcoin, likely it's something that a lot of institutions are waiting for more institutions to get involved for the market cap to be higher, because I think a lot of institutions just want to know that there's big players, that their friends are getting involved and that it's safe to get involved. And I actually think that a lot of institutions are still waiting to ensure that this is the right thing to do. So, I mean, this is only the beginning of the institutional flood, I believe.
I completely agree. I had Matt Hogan, which is CIO for Bitwise, on my podcast, and he was like saying to me, basically, this is the beginning. Actually, not even the beginning. They haven't even started yet, because many institutions, like you said so well, it takes time. They have to talk to people, figure it out, and wait a quarter and figure out how much they want to invest. And the funny thing is, like you said, we have the halving coming in about a week, more or less. And I think it's going to shake things up. I was reading up today, I don't know what you feel about this, but I was reading about Grayscale, GBTC, basically selling pressure almost over. Like the CEO itself said, hey, we've sold basically 50%. They started with 660,000 Bitcoin, and now they have 318,000. They sold 50%. So at some point,
I actually didn't realize it was that much, but that's, it's wild, because all the time I see people posting that, Grayscale's transferring this much Bitcoin, they're getting ready to sell, but the price doesn't really come down. So I think that they were selling into demand. So it's actually a very positive thing that coins are changing hands at this stage in the cycle, while we're kind of still at or below the all-time high. Having that selling pressure now without having any destruction of the trend, getting those coins to change hands. I mean, very positive development, in my opinion. You kind of want that. You want the ownership to be spread out a little bit more over time. And the ETF in general is a long-term bullish event. It's nothing to do with the short term. It's very long-term. And this is something that a lot of people, tend to forget, because the human mind is set up for immediate survival. So you're always looking for the immediate sort of results. But the ETF is going to be something that provides long-term support for the trend. It's how we're going to get Bitcoin to go to a much higher market cap. That was really the key, is the ETF. And so it's all playing out sort of almost in the best case scenario. It's almost mind-blowing, right? Like people that have been in Bitcoin for years, like us, and we see this happening, it's almost like, is this really happening? Like it's all coming to exactly what we wanted, more or less. It is going to change the behavior of Bitcoin, I think. The way that Bitcoin is treated by Wall Street is a huge factor. and with sophisticated money coming in, it's going to have a shift on Bitcoin's behavior, but that shift in behavior will take years and years and years and years. But I think eventually it will stabilize. It'll become sort of a main investment across the world. And then people are going to be flipping into low caps or altcoins at that point. But
Yeah. And speaking about changing hands, think about this. MicroStrategy has 1 point something percent of the whole Bitcoin supply. And in like what, 3 months, BlackRock has gone over MicroStrategy because they have now more Bitcoin than Michael Saylor. So when you think about it in perspective, pretty much every single Bitcoin that Grayscale has sold has gone into BlackRock, right?
yeah, it's wild.
I mean, I don't know because I'm just assuming here, but it's very much possible that in 3 months we could see another major pump. And you spotted a parabola. I think if I'm not mistaken, your target is like around $90,000 as a first.
Yeah, so this is probably the thing that a lot of people are curious about, of course, is the price action, the trend. And we've been discussing on my channel the parabolic trend structure, which me and you were chatting before we started this interview, and we were talking about how in the last interview that we did, we were sitting here. And when the price is sitting at this point, the parabola does not appear obvious, right? People were very skeptical of what I was saying at the time, but parabolic trends don't look like parabolic trends until you get the final extension sort of, or the second half, I should say, not the final extension. The second half of the parabola is when it becomes obvious and everyone goes, oh, it is a parabola. But the key, the skill part is like seeing it happen before, which of course nothing is guaranteed, but Bitcoin loves to create parabolas. It's something that generally it's a momentum based market. It's a lot of speculation, which is based on confidence. So confidence is the key thing. And there's many narratives going for Bitcoin right now. It wasn't just the ETF. The ETF gave us this drive up, right? We had all of that speculation going into the ETF approval, a slight sell the news event, and then you have the halving demand. And the markets like to go up into the events, right? A lot of people that are sort of, I guess, newer to markets and trading, they make the mistake of thinking that the day of the event is the important thing. It's not. It's everything leading up to it. And then when it actually happens, ETF approval, the market kind of just does nothing. The halving, I'm not sure. I mean, it's possible that it's a little bit underwhelming when we actually get to the halving, that during the halving, the price is sort of just sitting at a high level, kind of like what we're doing now. Maybe we pump up a little bit more into the halving, and then on the day of the halving, the price is just going sideways, or the week of the halving, the price might just be settling up because the anticipation is always the money maker. The anticipation makes the money, the event not so much. But now we're coming into the second half of the parabolic trend. And something that I've been explaining to people, because when I sort of, if I say that the target of the parabola is 90,000, people often go, well, Kevin, don't you think we're going to go much higher this cycle? I'm like, yes, I do. It's the target of the current trend. A lot of people get it mixed up. 90,000 is not a cycle peak target. It's the textbook target. So, but if you just compare what the textbook is suggesting to where we are with the Bitcoin's price, it's very clear to me that we are at base 4, because every time the price touches the trend line, the base 1 is where you create the initial support base where the parabola stems from. And that is obviously the bottom of the parabola, right? A lot of people like to cheat it up, but it's like, no, that's the base, the support, the beginning of the parabolic trend. That's base 1. Base 2, or every base thereafter, is created by a touch off that trend line. Base 3, a touch, that was the ETF approval / rejection candle, a touch off that. And then now base 4 is being created. And base 4 is not confirmed until we break into a new all-time high, because in theory, we could still go sideways, or we could dip even a little bit into the support line before getting a bounce up. So base 4 is in creation, and it's not confirmed until we hit a new high. And once that happens, you get your final extension up to what the textbook suggests is the sell point. Now, we'll get into what that means in a second. But base 3, according to the textbook, the price doubles in a very short period of time. And Bitcoin has been blowing people's minds recently, right? I mean, nobody really thought that it was going to come up this fast before the halving, hitting new all-time highs. And this is what's happening. We're going right along with the textbook setup. the price doubling from this point. Now, this is debatable. The exact point, is it 41 or is it 45? To be safe, I just say about 45 because that's where you're finding more of your resistance. It's sort of more of an average of that zone. From 45, you go up to 90 as a double. So according to the textbook, we're looking for 90,000 price doubles at their base 3. And a lot of people get worried about that. They think that, that means that the cycle's over at that point. And that's not the case at all. You have to remember about the timing of the market, the time it takes for things to play out. We haven't even had the halving take place. The stock market has just over the past many months started to break into a new all-time high. So there's a lot of time here. And there's also a lot of time for Bitcoin to play out a consolidation, meaning if we come up to a high level, it doesn't have to be exactly 90. I'm open to us hitting a slightly lower target. There's another setup saying 87,500. Textbook says 90,000. And then one of our Fibonacci targets comes in just below 95,000. So that is sort of the target range. I'm not too specific about exactly where because the levels of demand that you get when you have a run like that can vary. There could be heavy demand for Bitcoin at that time, and maybe we hit the 6-figure range before getting a consolidation. Maybe we don't do that. Regardless, somewhere in that area is where the textbook is telling us that we're going to see some sort of, I guess, a cap on growth in the short term. Short-term cap on growth, which then leads to most likely a major consolidation, which could be a shallow consolidation where we sort of settle up and find support at our current levels and then run up again. And if there's a lot of demand for Bitcoin, the end of the parabolic trend would end up looking something like this, where you would hit a high target, consolidate at our current price levels, more or less, where we're not really seeing the market give up the growth that much, pretty shallow. But if it was a 2017 style correction, we would have probably something like a 40% dip where the price would come back all the way into the 50s. And it would be like a sharp decline, shake people out, make people believe that the cycle is truly over before having a rapid rebound. Bitcoin loves to do this historically. If you just look back in time, these 30, 40% corrections are standard. And I'm very worried for a lot of the people that are just coming into the space. I'm very worried because these little dips that we get here, all these little dips, people are like shocked by them and they're scared. And I'm thinking in my head, you guys are not ready for what Bitcoin is capable of. Because in every cycle, I mean, even 2021, there was one major dip here on the way up that was 30%. A lot of people thought that was the end. A lot of metrics actually pointed to that January dip being the end of the cycle, right? There was a lot of metrics that topped out on this dip. And a lot of people exited a little bit early. But, some profit is better than no profit. So props to them. But in 2017, 40%, 40%, 40%, all the way up, right? So you have to be ready for that type of volatility. It's always going to return at some point. In my eyes, every dip we've had, this entire parabola has been shallow, very small in comparison to what I'm used to what you're probably used to Bitcoin doing in the past. This has been really comfortable, this run.
I agree. Like so far, I think it's been in the 20% region, every correction. Like you said, maybe that's the ETF effect. I don't know, but it's been, like you said, muted compared to the others. What's interesting in what you highlighted there is the fourth touch, which is going to happen, like you said, more or less sooner than later, actually, is going to potentially allow us to either chill and go sideways for a bit before we pump again. And if we follow your pattern that you have there, it looks like if we shoot to the sell point, do you feel Bitcoin is going to respect the fact that when we go and we shoot new all-time high, then we, quote, collapse to where basically we are now? Because Bitcoin, usually what it does is goes back to the previous all-time high. I mean, the cycle before we gone a little bit under.
You're saying in the long term, like in the very long term, are we going to come back to the current price levels?
Yeah.
I mean, it's more likely, I think, that we do because of, just like we're seeing now, Bitcoin in the past cycles would never come back to its previous all-time high early on. In the last cycle, we did. Now, you can make excuses as to why that happened, which a lot of people like to do. They like to say, Bitcoin came back to that point because of SBF or FTX and all this, whatever it is. But it is kind of peculiar that we did pull back there. Something that a lot of times you get is a point of no return. Like in 2014, 2013, we hit that top. What people don't realize in these past cycles is that the actual growth that you got was only this much, which is, I think, like 150% so from all-time high to next bear market low, about 170%. That was I don't know what you would call it, true growth from 2015 to 2014 to 2018 was 170%. That's it. Now, if you bought the absolute bottom and sold the absolute top, yeah, you're making huge returns. But the volatility is so tremendous that the actual growth between those two cycles is 170%. And if you look at this cycle from 2017 to 2022, it was negative. It was actually negative. You had a chance again to buy at those low levels. And your question is, are we going to see something like that again? Well, I think it really depends on the amount of growth that we see during this cycle. Of course, there's so many unknowns. We have just a completely new scenario in the global economy because of the global liquidity, which the global liquidity index, this is something I actually posted on TradingView, which is free to use. This is showing the global liquidity, the issuance of fiat currency from all the central banks around the world collectively. And during COVID, we had the massive injection, this huge injection right here, which was record-breaking at every level. And that record-breaking injection of liquidity into the global economy is still having a lasting effect on Bitcoin, because you'll notice the global liquidity right now is coming down, but we're going up. That usually doesn't happen for stock market in Bitcoin. Usually, we're kind of following the global liquidity, but this injection has had a delayed lasting effect where there's just so much money sitting in the economy that we're able to continue up without the support of the global liquidity generally, because we already got so much support. But my point is, there's so many different variables now where in 2017 the interest rates were actually going up. If you look at the federal funds rate, type in Fed funds rate, interest rates were going up. And the S&P, the stock market, and Bitcoin were both moving up with a rise in interest rates. This is the U.S. federal funds rate. Why was the market going up when interest rates were going up? A lot of people think that interest rates going up is bad, but it's a matter of predictability. Back then, the economy was recovering from 2008. There was optimism. There was a tech boom. The Federal Reserve said what they were going to do and did exactly what they said they were going to do. So everyone saw that as predictable. They were okay with it. It was comfortable. People were okay with speculating on the market because everything was sort of going as expected. Now it's very different. Now we had the highest rise in rates ever. The markets come down because nobody knows what's going on, right? The Fed's saying this, saying that. Inflation's transitory. It wasn't. Nobody sort of trusts the Fed now. So there is a little bit of uncertainty, I would say, generally speaking, on the future. There's war, there's deglobalization instead of globalization. So it's so hard. It's like quantum physics. There's so many different things happening, hard to predict. I would say that if we see a general recovery for most things, then maybe Bitcoin doesn't retest this previous all-time high. But if we see the world continuing to enter into a more unpredictable state, then we probably will see slightly less growth than we want, and we probably would retest these levels. That was a long-winded answer to your question, but that was like the only way I really could answer it, because there's so many factors. A lot of people just look at the Bitcoin chart, but you can't really do that. You have to consider all the things that are going on to really have a good answer to that question. And so that's not something I would really call out now, because there's so many unknown variables. It's not like the economy is just doing well, everything, we're just seeing growth, everything's fine. It's like, no, the world is a little bit effed up, and there's going to be a lot of surprises. So we'll see. Yeah. Hopefully there's a flight to quality. Hopefully, even during these moments of dark times throughout the world, people still flee to Bitcoin. Maybe maybe Bitcoin is the answer to the uncertainty. At least that is the hope and the dream. But We'll see.
It makes sense. And by the way, in this cycle, we've seen a lot of first timer, right? First time Bitcoin is going to all-time high prior to the halving. First time we have the ETF injection. So it could very be that we will see something we've never seen before, like how can you estimate all these inflows from institutions? I mean, I don't know how you feel about it, but I don't even know what retail is, to be honest. What is retail? I don't know. I don't feel it. Do you feel retail foaming into Bitcoin?
No, and this was something I observed over the market recently. Was that every time, if you look at like the shorter term, the daily chart, every single time there's a slight dip, ETF approval / rejection. Every red candle, even today, I'm sure you go on Twitter or something, you're going to see people scared, right? And so we're not in euphoria, right? Euphoria is sort of like the price is really high, usually at a new all-time high, and everybody is just happy with everything. Every dip is a buy, everyone's happy, there's no problems, but we still have a lot of fear, a lot of PTSD from the bear market. People just can't sort of handle a single dip. They can't handle it. It's all over every time there's a red candle. But it's interesting that the market seems to do the exact opposite of what retail is thinking. But yeah, I would say that in terms of the level of retail that we have, just based on my observation from being in these cycles, when we were early on in 2017, retail didn't really step in until the end, where we had it was hitting the news, going mainstream, and retail lingered a little bit more. So the amount of retail that we had sort of had like an uptick into this area where retail was still there in the bear market, and now because FTX was such a mainstream news story, there are still more retail traders lingering at the lows here. So my point is the amount of retail traders is sort of increasing every cycle, but it's not showing the classic retail behavior, the psychology of retail coming in, being excited and all these things. It's different. It's more like retail is sort of sticking around, but they're still like unsure, and they're buying a lot of altcoins, all those types of things instead of Bitcoin. So that's also another thing that I've noticed.
Yeah, I agree with you. I mean, think about Solana, think about all the meme coin extravaganza we just experienced, right? So that's liquidity, like you said. And I mean, here's the $1 million question. I mean, how are you going to plan it? I mean, what's your strategy into this Parabola? Are you going to sell a portion of your portfolio after the fourth touch of the Parabola?
So if we do have a final extension here, well, I call it a final extension. I shouldn't do that because it may not be. It may be. Maybe we have more demand than we thought possible, and we just keep going up. But according to the textbook, after base 4, you run to your sort of sell point. I think that it's too early in the cycle for me to really want to get out of the market, right? With the halving is just about to happen, and this extension up would be taking place right around the time of the halving, which is almost always the beginning of the cycle. There's always the question of how is this going to be different? How are things going to be a little different this time? The difference that I could see happening is that we run up into the halving, get that nice sort of sell point push, textbook push, and then we have a post-halving correction that shakes people out, which is sort of abnormal. I mean, it has happened in the past, but people aren't used to that. Not really since, I guess, 2016, we had a post-halving dip. And then 2020, we had COVID, so we didn't have a halving dip. But people aren't really used to having the halving and then a dip. So maybe there's a post-halving shakeout. We hit 90 to 95,000 shakeout. And it's possible that the chart looks very scary when this happens, but the dip is quite shallow, where there's still all this institutional demand that any slight dip below that all-time high just gets bought up right there. And we don't really have much of a correction, but just more sideways consolidation before running up again. Something along those lines is quite possible. Just based on the fact that every time the price of Bitcoin dips right now, while we're still sort of below the all-time high, if you've noticed, we don't really dip that much. With that in mind, if we do push up to a major new all-time high and then pull back, it may be very shallow, right? It doesn't have to be this super scary pullback where we dip into the 50s like 2017, though it's possible. Depends if the stock market's doing something very bearish, or there's a global news, war, whatever. Anything can happen. But if things are generally as they are now, I think we may just have a shallow retrace into just slightly below the all-time high and just continue to get bought up. And the same amount of demand that we're seeing for these levels continues to be seen at these levels during a dip. So I think that this is very possible. I'm starting to lean more towards this, a shallow correction, more of a consolidation at the all-time high, because Bitcoin doesn't like to give second chances to people that miss good prices. And we still haven't really cleared the all-time high. So I think taking maybe 25% as a risk management sort of approach, where if we hit a major target 90 to 95,000, it could be a good idea to take some profit up here. 25% of your profits, not your portfolio, just of maybe if you have altcoins, some of the altcoins that have given you huge returns, 25% off the top of all of your sort of your most gains of, again, the profits, not the portfolio, just as risk management, so that if there is a major drawdown that sort of resembles 2017, well, you have some risk off and you have some powder to reaccumulate lower. You could be more aggressive and just sell 25% of your portfolio at the end of the parabola to then give yourself a little bit of room, a little bit of freedom to, maybe buy some dips or position into other coins or whatever. But I think no more than 25%. Again, we're still too early in the cycle for me to want to get out. And the worst case scenario, right, would be us hitting something like 90 to 95,000 or maybe even 100. And then we come back and we kind of just trickle down for a while where we're just more or less consolidating. In my opinion, that's like more so the realistic worst case. And even that's not too bad, because the altcoins would probably do really well in that zone of consolidation. So at this point, any dip, even if we break the parabolic trend right now, I don't expect too much of a pullback, and it would really just be another accumulation zone. I mean, if we have this much interest in Bitcoin here, if we dipped even soon, I think that it's going to get built up really fast. So I'm hesitant to take too much profit at this sell point, though I'm also hesitant to not take profit, because honestly, I think a lot of people have that issue of just, but it could go higher, but it could go higher. And it's like, well, the market usually, just takes time anyway. So
Bitcoin has never seen 8 monthly candle in a row. We've seen 7 in 2012, and everyone was going on Twitter, the first time. No. It happened in 2012, 7 months in a row, green.
Did you? I think you posted that on Twitter.
Yeah, it was driving me crazy, because everyone was tweeting about it. I was like, guys, calm down. It happened before in 2012, but it never happened 8. And technically, historically speaking, April is a fantastic month, because April is bullish, right? I mean, what's your take in having potentially 8 green months? Because if that happens, then it will be the first time.
There's always going to be a first time. It's going to happen at some point, mostly, so it's very possible. I mean, what is it? It's April 11th right now. The monthly could totally end. We could totally end it in the green. And the reason why, I think, is because we had it was sort of a double whammy. Anticipation for the ETF, it gets approved, and basically we got lucky on this monthly right here. It closed green, but it was almost just neutral basically. But it is a green month. Anticipation to the ETF, and then anticipation to the halving. So you had 2 major anticipation events, and then when you think of it that way, it's like, okay, that makes sense. In other cycles, we didn't have these 2 major events going into this period of time. And so it was kind of just all that anticipation, all that demand was sort of just pulling up on the market to give us those 8 months, or what could be 8 months was 7. So it was the double whammy.
Yeah, exactly. And what's also interesting, like you said so well, if you go back in 2012, you will see there is 7, then you have a red candle, and then I think 6 more. So technically, you have almost 14 in a row, besides 1, which is the number, was supposed to be the number 8. So we could very much do a mimic, the same cycle, but instead of having that kind of nasty red candle, we just go green all the way. It's possible.
Yeah, and this is the thing though. It's like, okay, you're going to get those, maybe 8 green months. I don't know, maybe 9. Who knows, right? But at some point, if you're extending off the parabola that far, and it's going that well. At some point, you can't be surprised when you get this huge, like a big red monthly, and then the market kind of just chops around for a bit, maybe gives you one dip below the all-time high again before going up. You got to, and that's why I'm saying 25% of your profits or 25% of your portfolio, if you're going to be really aggressive, is not a bad idea on a major extension like that, right? I mean, it just gives you a little bit of, I guess, peace of mind knowing that you have some dry powder to reaccumulate on a dip. And I think if we did dip like this below the all-time high, it would very likely get bought up quite fast and push us to a new high thereafter. And what happens at that point is that the parabolic trend actually expands. This is actually exactly what happened in 2017, is that you break down and you actually expand the trend and it becomes a larger parabola. You guys see that? And so a lot of people like kind of make fun of me. They're like, oh, you're going to change the trend line. Well, this is the current trend, which I believe is going to break down after hitting that 90 to 95,000 sell point. Maybe it's a little higher, a little lower, breaks down, and then the trend will just expand if the demand is still there. I mean, we're still so early in the cycle. I don't think that it wouldn't, or I don't see why we wouldn't expand the parabolic trend into a larger one. And again, that is also hard to spot. Like, if you remember early on when the parabola was being formed, nobody really saw it here or here or here. But once you get that huge extension like we've just saw, it becomes more obvious. And it's the same thing. If the trend comes up and we break this current parabolic trend and we come down, it's likely going to be creating a larger one, and people won't see that until it's created. But this is just the reason why I'm saying it is because Bitcoin does this almost every cycle.
Exactly. Yeah, so much easier in retrospective spotting something has happened, right? And like you said, the parabola, this is what it wants to do now, but maybe later is going to go under a different trajectory. That's super.
Yeah,
makes sense.
I think it's very likely. There's always gonna be a shakeout. I have a hard time believing that everyone is just going to be very comfortable and we're just going to do this all the way into the end of the year. It's not going to be that, right? I mean, I don't think so. It's likely going to be a lot of shakeups, shakedowns, rebounds, continuation, all that stuff. You got to be ready for the volatility, and you can't be surprised, and you just have to accept it. You can't have the major ups without those major downs. As we get to the final point, as we're extending vertical, again, I keep reminding people, it's going to be vertical soon. We're getting to a vertical point, and it's like, you got to be on your toes at that point, at least somewhat. Like you can't, it's gonna shake you out, or it's gonna shake up the market at some point. So
from base 1 to base 2, you had that kind of sideway action. Those, I think, are the evil one, where people, they're calling the end and they go away, they leave the market, because when the market goes sideways, that's it. Nobody's interested anymore. Whether if he moves up or down, people are interested, are engaged. When it goes sideways, then this is, I think, as my opinion, this is where we lose most of the confidence, most of the interest. People go away, get bored, maybe through summer, I don't know. So I can see so well, like you draw earlier, it's gonna be one of those interesting moments, followed by most likely another one of those base 2 to base 1 kind of chop solidation, as we say.
Chop solidation, I like that word. Yeah. Chop solidation. That's a new one. I never heard that.
Yeah,
I'm gonna write that down.
It makes sense in my mind, but
if I had to take a guess, it wouldn't be this perfectly sideways, though. You never know. It's likely going to give you sort of a stab to the gut, like it's going to feel a little bit more painful. You're going to get wicks, right? We didn't really see wicks down here. I think that we're going to get some wickage and a little bit more. It's going to be much more like a roller coaster, I think. Yeah. But it could be very shallow. We may just revisit sort of where we are now, and the previous all-time high just becomes the new support, which would be a sign of incredible strength if that does happen. And even if in the worst case we come down, we hit like the low 50s or something, it's going to get bought back up very quickly, considering how much demand we already have for Bitcoin at these levels. So as time goes on, I'm starting to lean towards a shallow pullback that sort of is just revisiting the highs, sort of confirming it, because all the sophisticated money on Wall Street, they, first of all, they need a pullback. They need liquidity to sort of be freed up for them to buy what they want to buy. They can't just click buy into the pump because they're going to send the price. They're not going to get a good deal. So a lot of institutions, I think, might be waiting for that big shakeup, and that'll be their signal to jump in. And you're going to see a lot more support come in at that point. It might just be a shallow retrace. Yeah, I don't think it's going to be all too much. A lot of people get scared when I talk about stuff like this, but honestly, it's just normal market activity. And it's just going to be the sort of final test, because it is very, very, what do you call it? Disenfranchising for people when the price is at the current level of 70,000. We run up to something like 90, 95,000. And then we come back to where we are and slightly lower. It's sort of like defeated. They're like, oh, we're back here again. I should have sold here. But all the long-term players know you just got to be willing to wait. And honestly, some of the people that have done the best in this market that I've seen are the ones that almost just don't look at the chart. They literally just buy and they check it like once a week, once a month, and they don't really care. They actually do really well, because the people that stare at the chart, I mean, every day is like a problem for people that aren't used to it. If you're staring at the chart, it's not going to be nice if you sort of aren't trained to see that price action and to understand and know that it's normal. If you stare at the chart every day, you're going to drive yourself crazy unless you trained to do so. For all the new people, that is.
That's a really good point. I mean, one of the best technique, as far as I know, is dollar cost average in, and not even out, to be honest. You just dollar cost average in for 8 years or 2 cycles, and then you're set. I mean, no financial advice, but that's what I'm doing.
It can be very simple. It can be very, very simple. You just buy, you just hold. A lot of people, I think, care too much about the chart. Whenever something happens, they're spamming Twitter with their terrible opinions. I mean, I think everybody's opinion is terrible. That's how I look at things, not including my own. So I'm always skeptical.
So you question everything.
So people just get scared of every little move, and looking at the chart every day can be very, very. It can be bad for some people, unless, again, you're trained to do so.
Okay, nice, Kevin. Thank you. That was fantastic. I mean, I have a question for you. So you mentioned taking profit. I mean, are you planning to profit into stablecoin, into cash, into gold?
If we're talking about the scenario that I just showed you guys, where we run up to the sell point, comes back a little bit, and it's sort of in the long term, a correction like that is pretty short. It's actually not very much. I mean, retail traders might think it's a big thing, big deal. It's not. It's pretty short term. You're talking about a couple months or something, not a big deal. So for a couple months pullback, it's more or less just a risk management approach where you sell 25% of your profits, or if you're going to be aggressive, 25% of your portfolio, and then you just go into stable coins. Now, the reason why is because it's short term. It's something that you want to be able to pivot back into the market. If the idea is correct and we do pull back, you want to be able to pivot quickly. It's not longer term enough to want to flip to something like gold or real estate or something like that. At least I don't think so, right? So if it's going to be sell point correction continuation within a few months, just stable coins, risk off a little bit and then reaccumulate. And when you would pivot into gold or anything like that, that's something I would consider more later on in the cycle. I mean, I guess the transaction there would take some time, right? I don't know.
Yeah, I agree. Also, in some places you might pay taxes. You'll be taxed. It's a taxable event technically. So if like you said so well, if the plan is to stay in the game to reaccumulate as well, you might as well stay in stable coin. So you're already in kind of the digital, as opposed to sell the gold and pay commissions and rebuy. I mean, it's going to take you forever. You will miss the deal.
Right. And also another thing is, if you are mainly holding Bitcoin, I think that correction scenario is also not, it's almost not big enough of a deal to sell your Bitcoin. If you're just holding Bitcoin, honestly, just get cash to buy that dip. You don't really need to sell. But for the altcoins, it's a different story, because you might see like 50, 60% dips in that volatility, like really huge wicks, all that kind of stuff for the low caps. So if you're trading the altcoins, be ready to, I think, take a little bit of profit off the table. If you're just holding Bitcoin, honestly, I would say you can just chill. If you're okay with the volatility, just get some cash ready to buy that dip. But if you're dealing with the high risk assets, that's where you want to take something off the table to reduce risk, because the drawdowns on the altcoins are just too big to ignore,
Yeah, completely agree. When they dump
Yeah.
much, much harder. But Kevin, thank you so much, man. It's always a pleasure having you on the show.
Of course. Mauricio, thank you so much.
Cheers.